Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
All right, everyone. Welcome to the show. Thanks for joining us. It's an interesting time to be in property investment and mortgages. And you've been tuning in recently. You would have heard some of our coverage dissecting the Royal Commission, which has now been handed down, the recommendations, and we're all trying to work out what's happening with the world. I'm keeping abreast of it, but I'm struggling sometimes to actually really get the different angles, what it means for everyone involved. My point of view, my perspective as the host of the Smart Property Investment Show is that I'm a property investor first and foremost, and I want the best conditions possible for me to be the best investor I can. And it's the central thread to this podcast, and I keep focused on it. And I'm fortunate that in my life I have a lot of people who I can give a call to or catch up for a coffee or even a beer to sort of pick their brains and understand where they are and what they're doing. And I lean on that privilege every single day, and I'm going to do it right today, and I'm going to make sure you're involved in these conversations. It's a very special podcast. In the studio with me, I have the co-host of the Property Couch, Ben Kingsley. He's also director of Empower Wealth, and also Alex Whitlock, who you may know his voice. He's director of mortgages here at Momentum Media and the person I co-invest in our portfolio, Smart Property Investment. Gentlemen, how are you going?
G'day, Phil. Thanks for having us.
Yeah, good to be here.
Now, Ben, it's probably a couple of years since we're on a podcast together. You guys are killing it, and I am an avid listener of the Property Couch.
And likewise, I tune in every week to get the latest. I mean, we're all students of this space, right? And ultimately students of life. And, I don't have all the answers. I've got a few opinions. I'm passionate about passing on that education, but I'm also learning. The marketplace does have subtle changes, but none bigger than what we're experiencing now when it comes to the runway of the credit squeeze that we've had. And to top it off has been, the sort of surprised move at the Royal Commission about sort of moving to a fee-for-service model for mortgages, which really did stun me a little bit. It didn't. I'm always a cynic, right? I always get this sense that when we're going to do these types of things, how do you, and big business and the big banks, I said it on our podcast when it first came out, I said, if they're gonna comply with this, what do they really want to get out of it? And the cynic in me said, well, what would be ideal is if they were able to wrestle back some of control. Now, when they don't want to make widgets, in other words, they want to lend money, but they want to be in control of the customer experience. And when Matt Cromney said what he said, that just blew my mind.
Well, I think it threw everyone. And I know Alex has just travelled back from Adelaide. There's a big conference going on in mortgage land at the moment called the Better Business Summit. And the key theme everyone's talking about is what the future looks like for mortgage brokers. Ben, I've known you for, probably a decade now.
Yeah, it's been.
I imagine. And we've sat on the board of PIPA together, the Property Investment Festival of Australia. You're now the driving force behind PICA, which is an advocacy group for consumers. You've got the Property Couch. You also run a business based around mortgage broking and wealth and property advice. So you're in the trenches. You know what's going on, right? What I want to achieve today is I want to extract some of your views, your opinions, and maybe mesh a little bit with Alex, who comes from a different angle. You're like myself. You're a property investor first and foremost, but you also know this property game. So if we can give at least some sort of guidance or some sort of clarity to our listeners
Make
around
some semblance
what
of the
it means,
chaos out there.
What it means. So let's put some sense to all this. Alex, what's your view of the world right now?
Oh, look, I think that it just, sort of in line with Ben, it was a surprise. You kind of almost didn't really expect the outcome to be what it is. But, we should have learned from seeing what happened, with Brexit. And then we've got our good friend, Mr. Trump, who's in charge in the States. So I think you've got to expect the unexpected. I think there's a very well-intended Royal Commission, horrible stories of misconduct across banking, superannuation and financial services, some fairly criminal acts at an institutional level perpetrated by the big banks. Been some changes there as a result. So you kind of, you sort of watch the sort of proceedings and hear the horror stories, and then into the fray, brokers get cast by the CBA primarily. Look, I think it was a double-pronged attack, partly to deflect some of the attention that they were getting, but it was also an opportunistic moment to really to sort of target a channel that is potentially a threat to the major banks in terms of distribution. I think they've spent a lot of money and a lot of decades, if not centuries, building up their retail presence. So and it resonated with the Royal Commissioner, because the essence of it is around conflicted remuneration. Well, what was that in layman's terms? They're saying basically that if a broker is paid a commission by a lender, then it's going to create a poor borrower outcome. And in simple terms, if you haven't used a broker, which 40% of Australian buyers haven't, but you might think, well, that makes sense. If you are, on the other hand, one of the 60% of use a broker, then you go, what on earth are you talking about? So that's sort of the overview of sort of where things were.
Yeah, and I think, Alex, what you're also talking about, I've heard you make some comments on this matter already through your mortgage broking podcast that you run, and I concur. I don't think in terms of what you were saying around consumers, I don't think it's a hard luck story for brokers, right? In terms of the consumer is not going to be interested in that, and this is a consumer podcast that we're talking about here. So I'm of the view that if the consumer loses the subject matter expert in terms of in the investment space, because there is a differentiation, right? The average mortgage broker who may be processing a first homeowner compared to someone who's processing an investor that might have 2 properties, 3 properties, or really sophisticated, it is chalk and cheese in terms of the expertise. Now, you do not find that expertise if you walk into a bank.
You're absolutely right. I think there's many things to consider, and hopefully we'll chew through the most important things. But first and foremost, you're absolutely right. I mean, I've taken out probably 30, 40 mortgages over the years. I've gone direct to the bank, but the first loan I ever took out was with a mortgage broker, and this is why I'm here today. Well, I've got the privilege to be, doing what I'm doing and partnered with Phil and still investing in property. But I bought an off-the-plan apartment when I lived in Hong Kong. That was the first time I'd bought. Came towards settlement, being the kind of disorganised punter that I am, didn't do a great deal fast enough, so then rushed around and spoke to the Aussie banks that were over there, ANZ, Advance Bank at the time, CBA, Westpac, the usual suspects. And I had a very hard lesson. So I went to them assuming I had good income. It was a sound investment. I was looking for an 80% loan. And they just turned me down one by one. And I kind of was a bit blasé to start with. Then it started getting closer and closer to settlement, and then it was a real panic. So the developer said, look, have you thought about using a broker? I hadn't got a clue what he was talking about, but I had a sense that, I had sort of an emotional sense of concern, as if it was maybe sort of a lender of last resort, or there was something a bit sort of, a bit murky about it. But I was so desperate, I went, okay, line me up with a broker. So a broker came over from Perth, Janet Smith, I think her name was. She came over and she sat down with me and said, you're going to get a loan. I was absolutely, I was close to something by this stage. She went, you're going to get a loan. She talked to me for 3 minutes, looked at my financials, went, you're going to get a loan. What was more interesting is she also then said, look, I'll actually get a loan with ANZ. Now, I said, but they've already knocked me out. She goes, don't worry about that. That's the people here. I know how to present your loan. I know how to present the documentation. You'll get your loan. So it was approved, So that was my, as a customer, as a borrower, that was my entry into mortgage broking. And mortgage brokers, very simply, as you quite rightly say, they deal with borrowers all day, every day. They are sharp. You go to banks, and I've done it a number of times where I've had to go to a bank. You just have to educate them. You stand there, Phil, you know what I'm on about. You go in there and you have to educate them, and you go, no, it doesn't work like that. And they try and sell you a whole load of crap that I don't want. I go in there and it pisses me off. I go in there to get something done, and they just do this whole, let's have a look at your whole financial situation. I want something. Give it to me. You go to a broker, you want a loan, you need a loan, they'll give you what you want and they'll do it effectively.
There's lending and then there's strategy. And so I think that was the big message for me as I went through my experience. So I was the same thing. One of my first loans, I did go to a broker. Now that broker just focused in on price and so they were sort of new to the game and I was supporting them, and they didn't tell me what an offset account could do. And they didn't ask me in terms of how I could park money in an offset, because if this property was going to be turned into an investment property later on, that I could move that money and put it off my, deductible debt versus non-deductible debt. So I've had experiences of what I was saying is the average broker versus also the investment savvy broker. And it is chalk and cheese. Now, that was a long, long time ago, and I think lenders, consumers are getting a lot more sophisticated. There's a lot more information out there. There's a lot more education. I mean, you could spend 100,000 hours on YouTube just watching brokers explaining how different loan structures and all that work. So for me, that's the bit. There's 2 critical things. There's that one there, and I saw the margin squeeze that occurred when competition came into the market.
Yeah, we all did.
Yeah, and it's in your report. It's as clear as day in terms of the cost effectiveness of having competition in a marketplace meant that borrowers pay less. That's a great consumer outcome.
This is a critical thing. And You're absolutely right. You make a really, really good point. I mean, I'm pro broker, but hey, you've got to look around. I'm pro hairdresser. Not that I've got much hair left, but you've got to find a good hairdresser. It doesn't matter. You've still got to find the right provider. And there's some there's some excellent brokers. There are some that are okay, and there's one or two that aren't that good. But the really fascinating thing, and it's about borrower outcomes, is so we conducted a major report to find out exactly what borrowers' experiences have been, and because it's important, because you know what really irritates me. You've got politicians, you've got big banks telling borrowers what's best for them. No one's bothered to ask the borrower. So we went out and thought, well, we'll ask the borrower what they think. How they rated the broker, if they would go back again. So the findings were there was 5,800 consumers participate. These are people who've taken out a mortgage.
So this is your consumer access to mortgage reports.
It is, yes.
Intelligence report. Okay.
Yep. So we went out and we first of all wanted to find out, first of all, what the experiences were with borrowers that had used two different channels. We'll call it proprietary, which is essentially really bank based, but any lender they've gone direct to, and then the mortgage broking channel. Satisfaction levels for brokers were, for those that were satisfied or very satisfied, was 96%, which is phenomenal. I mean, I'd struggle to see any kind of service that would rank that high. Whereas you compare with the banks, it was not bad. It was 67%, but significantly higher for brokers. We then went on to ask, would you choose to go back to that same channel again for your next purchase? 95.8% of those surveyed said that they would return to a broker. So almost watertight. The story is very different for those who went to a bank. Only 30% would go, or just over 32% would go back to a bank, with the remainder planning to go to a broker. So you start to get a story here. And this is, why is this important? Well, it's important because, as Ben quite rightly said, there are great brokers and there are some okay brokers and there are some not too good brokers. So taking that as a given, if you've got 96% of people who've gone through that channel and are phenomenally happy, it tells you a story about how dissatisfied people are with banks and how valuable having, a broker there to open up, as Ben says, an option of lenders, injecting competition to the marketplace. And also, it's not just about price, it's about product innovation, it's about flexibility, it's about tailoring things to a particular borrower's needs for a specific property at a particular time.
So let's look at what we know and what we don't know. So here we are, it's the middle of February, and we've just gone through a Royal Commission. It was handed down a week or so ago. There's a number of recommendations, and the Liberal government, the current sitting government, said, we'll take on all those recommendations. And pretty quickly they backflipped and said, there's probably one or two we are a little bit unsure of, primarily around the way in which brokers are remunerated. Subsequent to that, everyone's been talking about it. We've been talking about it. Alex, you've been talking about it. Ben and Bryce on Property Catch, you've been talking about it. Everyone's talking about it. It's a lot of talk, a lot of discussions, a lot of meeting happening in Canberra right now around what this means. You've got a number of the aggregation groups and also the industry bodies supporting brokers are firmly behind this and advocating hard. It's all over TV. It's all over the joint, right? So what we know is that this has happened, and we know these recommendations are being handed down. What we don't know is what is now going to happen with those recommendations.
Just before, I'd just like to jump in and say, let's just look at what those recommendations are. So it's about the way that brokers are paid. So as things stand right now, the broker is paid a commission by the lender, and that is broken down into two components. So there is an upfront fee, and then there is what's called a trailing commission, which is a deferred payment as part of that upfront fee. Now, commissions in general just sound and smell dirty, so there is that sort of, and I think this is why the Royal Commission has looked at them and has made a deductive leap that they're not good. But you've got to understand the economics of what a commission is. So this is essentially a payment that is in lieu of paying a full-time person a salary. So mortgage brokers don't get paid a salary, okay? And if you look at it, and if you start to dig down and actually understand what the commission is, so you have a mortgage broker who operates on your behalf. They go through the most onerous process. For you guys, everyone who's taken out a mortgage, you know what I'm talking about. These guys go with you every step of the way. They prepare the application. They will present a number of options to you. They'll look at your specific needs, which are much more complicated now for most borrowers than they were 20, 30 years ago. And they only get paid when that loan is settled. So you've got people who are putting in time, effort, they're missing out on doing other things. And at the end of the day, if they don't get the outcome for their customer, for the borrower, they don't get paid. And this is really critical. So, the Royal Commission is looking at this remuneration structure and saying, we think this is conflicted. So we want to get rid of this results-orientated payment for the broker based on the outcome for the borrower and replace it with the proposal is that all that commission goes and that the borrower stumps up on top of all the other costs they're parting with. Let's not worry about how much they're paying for property in this day and age, but you've got stamp duty, you've got conveyancing costs, you've got all the other costs associated. Now the proposal is that the borrower pays more money.
It'd be remiss of me not to say that banks are already making a few bucks out of people taking on mortgages.
Phil, I've crunched
right?
the numbers. So just to give you an idea, and that's what it is. If we took the word commission out and we say it was a revenue share for the introduction, because one of the things we need to understand that I haven't seen any bank deny, that is, it's cheaper to distribute their mortgage products through a broker than it is through the branch channel.
Absolutely.
And
it's
the mobile
cheaper.
channel. It's far cheaper, Phil. It's been evidenced through the UK studies. They don't talk about it, but internally they all know, because I don't have to pay wages. I don't have to pay holiday, sick leave.
No superannuation,
I don't have to
nothing.
lease the building that the broker might work out of or whatever it might be. So there's no payment if there's no deal, right? So if there's no money coming in. So banks or lenders have a choice whether they want to sell through the broker channel, and some lenders and banks have said, no, we're not interested in that. That's a cost to us. We want to control that distribution. And they've got every right to do that. But when I look at the stats around, coming back to the Insights report here, that in 1986, less than 10% market share for broker originated loans, now 59%. Now, why is that? So why is it that a broker has been able to create that marketplace? Purely through choice and service.
And demand, and just rising year on year on year demand from borrowers.
Because they get a superior piece of advice.
They do.
And they get competition and choice. And for me, that's why I entered the brokering space. That's why we have a brokering business, because I'm all about wealth creation. Now, when you're about wealth creation and in property, you do have leverage. You've got to be sensible about that leverage. But I can also tell you, this is where, when I was watching what was proceeding through not only the Royal Commission, but also through what's happened in the regulatory space around how when you go to a broker, the ACCC report says the broker does a higher loan for you. And that means that the broker gets paid a little bit more. But I can tell you, and I will say it in any report or anywhere, and I'm saying it publicly now, that if I could show a customer through careful money management, and we go deep into cash flow movements every month for the next 40, 50 years, that borrower can safely borrow another $100,000. And let's say instead of buying a $400,000 property, they bought a $500,000 property. Inside 25 years, they could be, if we have the same type of return in terms of about $300,000 better off. Now, if I have a best interest test, which I welcome. I think that's a good development.
Yep.
There's some good stuff in
It's one of the
happening.
recommendations.
It's
of the
one of the
Royal Commission.
recommendations of the Royal, and I will support that to the cows come home.
I think everyone in the industry does personally.
I agree. I mean, there's got to be some accountability there. But if the accountability is that I can't recommend them to borrow more money because you want to be conservative, that's where I worry.
Hey,
right, the devil's in the detail.
Let's look because this is something that's been banned around. They go $30,000 more through the broker loans. Okay. Let's consider what that means for the broker. So $30,000, the broker will get about I would say once all the deductions have gone through, about a 0.4% incentive on that. You're good at maths, Phil. What's that?
Oh, $30,000?
Yes.
Oh, it's a couple of slabs of EB.
Yeah. So we're talking about not a great deal. We're not talking about brokers getting thousands of dollars extra from what they are facilitating. And I think to Ben's point, it's about a more sophisticated borrower going through the broker channel. There's something else as well. Just while you were talking, it occurred to me as an investor. If you go to a bank branch, you get whatever chump is stood there will deal with you, and you've got the luck of the draw. Now, investors, when you use a broker, you've got the chance to go and find, and there are lots of brokers that specialize in investment, and it is such a nightmare. I mean, we'll go back to this again and again and again. And, you walk in the branch and you're at the mercy of whoever's there. And you know what? I used to deal with, there was an ANZ branch manager in St. Leonard's years ago who was fantastic. And I was very happy with the outcome. These were for investment loans, and she knew her stuff and she was efficient. I've walked out of bank branches because they just don't know, but they won't tell you that they don't know. They'll stand and grin and they'll go through the process, and you go, and then the penny drops for you as the borrower. You go, this person is not going to be able to help me. They don't understand property investment, and I'm going down a blind path here.
And you go in and they say, oh, you don't want interest only. or sorry. And if I'm naive and not educated and I'm thinking I'm buying an investment property, you don't want interest only, I can get you a cheaper interest rate on principal and interest. Oh, so, okay, well, that sounds good. And I'm going to cross-securitize you. I'm going to sort of lock you in with your lending structure. So this is my point around this is why I'm saying I'm not interested in the broker story so much as I'm interested in the client outcomes.
Absolutely.
And the investor outcomes that we're dealing with. So if I have a best interest test that says to me that I can't advise my client based on the analysis of the cash flow that I've done, that they shouldn't push the envelope a little bit harder to borrow a little bit more. Whereas if I went to that one branch and they've got one servicing calculator, that one servicing calculator maxed them out at a certain point. And I've been listening to some talkback radio and some commentators and people have been ringing in, and you get I used a broker because the bank wouldn't give me a loan. And the commentator the media commentator saying, well, that's probably a good thing. You probably didn't, you probably wouldn't worth getting a loan. And that's that sort of panic merchant sort of that the regulators are coming in. And coming back to the Royal Commission, we did not see systemic troubles inside the broker space.
Yeah.
We saw an introducer model, which was interesting through NAB, and we saw some examples where, there was always bad one or two people who had committed fraud or what. You're going to get that. I mean, if we did a Royal Commission on doctors, I'm sure we're going to find a doctor here or a doctor there who's not great.
If you look at some of the numbers of the reports, and it's in this Consumer Access to Mortgage report, the actual complaints to the financial services ombudsman around mortgage brokers is largely it's a decimal point compared to directed financial institutions.
And that's what makes it so extraordinary. This is the first ever significant recommendation change that hasn't been consumer-led.
But let's get into this. Unless there's so much fog. I mean, I think people just glaze over because we're very close to it for one reason or another. But let's just get into it and let's look at really what the nub of this is. So people are probably asking, so why? What the big deal? Why the shift? Why move? Why is there a move to switch a model that works well to a client pays fee? Well, I'm afraid to say that I believe that this is a very cynical move by a particular big bank, CBA, taking advantage of the Royal Commission to switch the focus onto the broker channel. So, like I say, first of all, deflecting away from its own wrongdoings, which are significant. But this is basically an opportunity to take out a channel which offers choice, which offers competition amongst lenders. And if you look at the size of the retail networks, there are certain banks, 4 of them primarily, not all equal. I think Westpac has the biggest retail network, followed by CBA, then ANZ, and then I believe NAB. But you have institutions that have invested very, very, very significant amounts in a bricks and mortar network. Now, the question I would ask is, whose best interest is getting rid of and diminishing a channel that offers choice, when you have a very fundamental proprietary channel that you can control things. So I'll go back further and, you look at the margin on mortgages when choice wasn't there. And you can only look at history to try and maybe start to forecast what might happen in the future. So you go back historically, and some of you, who have been around for a few years like me with a bit of grey hair will remember, the Wizards of the World and the Aussie Home Loan. So those institutions came in because they went along, they looked at the marketplace and went, hang on a second, the banks at the moment have a margin of 5%.
Gouging,
let's just quantify what this is. So what you've got to understand, there is a base interest rate that the bank doesn't get hold of, and then they put a margin on top where they pay their fixed costs and they pay their shareholders. So the banks had such a deep, fat margin, 5%, that these innovators came in and went, well, you know what? We can provide loans that are cheaper to borrowers and we can make good money ourselves. So they undercut the majors by in excess of 2%. Now, they took that and they gave it back to the borrowers. And this is what frightens me. And the cynic in me, which is large, says there is a bid to take things back to the 1980s where customers, borrowers, you and me, investors are forced to go to a few providers. You take all the smaller lenders out of the marketplace that have pushed down those margins and we go back to the good old days.
And we've seen that with the Netherlands model that they were proposing, that the number of lenders over in that area over a decade has significantly reduced. So it's clear that if you go for a fee-for-service model, that you will have contraction in terms of the choices that you have. So it is an interesting play because, in our business, we've got most of our business is fee-for-service because we want to ultimately offer that thing. But I sit back and I come back to those figures before, Phil.
Yeah.
On a $500,000 mortgage over 20 years on a 5% interest rate, this is outside of principal. This is just the interest component, is $292,000 on a 20-year mortgage that the borrower is going to pay $292,000. Now, and you're going back to the borrower and asking them to kick in for another $3 or $4 grand
For the privilege
the privilege of borrowing the money. Is there not enough for that to share? And you were just talking about the gap in the market that Aussie and Wizard. Today we call it disruption, don't we? Right, that's the fancy buzzword. Disruption. They saw a gap in the market, and there was an opportunity, and it proved to be true. There was too much fat in the game, and competition closed that down. Now we're going to see innovation change our society over the course of the next 10, 15, 20 years, where the jobs of today may not be the jobs of tomorrow. Now, for me, it's like, okay, we've got a stable financial system, and I congratulate the 4 pillars has served us well over time, but the world is moving, okay? And I'm seeing APRA now seeing introducer and challenger banks and neobanks coming in, and I'm excited by that.
Absolutely.
But I'm also excited about the future jobs that gives us. And when I see 27,000 people, full-time employed in the industry, and then the flow on, the second tier and third tier job opportunities here, why do we want to collapse that? Why do we need the big 4 banks to make more profit? It does not make sense.
So the
Why
question,
is that a good client outcome?
let's do this. What I don't get, maybe it's a question for you guys, is that you've said, Ben, that broker introduced loans, and that's like an introduced term, right? But loans which a mortgage broker sorts out for the customer is cheaper for the banks to originate than a direct model, right? Well, why don't they just shut their bank branches down? Because no one really wants to go to a bank branch anymore. It's cheaper for them to have a broker-based model, and they're still making $250,000 on a $500,000 loan as it is right now. So
Phil, I'm sitting in the board and I'm sitting in the executive team of CBA or another of the big banks, and I need a strategic competitive advantage in my business. And I'm looking at all my competition and I'm seeing how am I differentiating myself in the marketplace. Some are choosing to have a branch and that customer and that face-to-face for the baby boomers and those people who aren't necessarily adopting to that. But I'm also seeing is how can I make it more difficult when I'm watching my market share go from being the controlling distributor of mortgages, which ultimately then leads to the credit card, the offset, or the transactional banking, the insurance and all of those type of things. And you are taking that away from me. I am going to fight.
Absolutely.
So congratulations to CBA for digging in and trying every strategic way that they can look at it, because ultimately they know that they don't want to just be selling a widget because they're dead. There's no competitive advantage. And coming back to what we were saying before about the sort of talkback hosts and all of the calls coming in, and the jocks going back basically saying, maybe you shouldn't have got that loan. Well, this is the beautiful part that you were saying before, Alex, around it's not just price, it's credit policy. So if I'm a new arrival to the country, there might be 20 banks that don't want to know me. All right, but I've come with a computer science degree and 5 years working in Silicon Valley, but I'm coming into Australia and no one wants to, no big bank wants to deal with me, but there's a small bank or an independent bank or a credit union who has a credit niche, and they give them the loan. But that wouldn't have been found if there wasn't that broker there helping them.
You're so right. And the other thing is as well, just to add to that, so it's not a matter of what I think often people who haven't taken out a loan don't really understand. They go, well, there's lots of banks there, and I can go and look online. I can see that, that these big 4 banks have a product that's all pretty similar, so what's the big deal? What happens is, and it's, look, we're in a tough environment at the moment, and we're in a very challenged real estate market, and lenders change their policy. What you may not see is the policy side of things. So what might happen is ANZ right now might be lending on a particular asset class. Let's say they might be happy to lend on a studio apartment in XYZ miles from the CBD, but because they reached their capacity for that particular asset class today, they changed their policy. Now, I don't know that as a borrower, as a buyer, as somebody who's looking to settle, and it's a really stressful thing. And I'm speaking from experience because I've been there. So I walk into an ANZ branch, or maybe I walk into CBA. If the bank has changed their policy recently, you go down the application because the punter doesn't know who's seeing you. They go, yes, Mr. Whitlock, come in, let's go and fill the application in, and can I sell you a credit card as well? I put my application in and I get knocked back. I go and see a broker who is agnostic in terms of lender because their outcomes are aligned with the borrower. So they will sit there and they know policy from 20 lenders at that particular time. And if ANZ has just moved out of the market, but CBA has come in, they'll go, look, we'll go with CBA because they're lending in this particular asset class. And it's not necessarily really complex kind of or sort of niche areas of property. There are suburbs where lenders, you've got to understand, there are suburbs where lenders just go, we're done with that suburb for the time being. And this is critical. This is what you don't understand. So I'm not only advocating brokers because I think that you get a better service, but it's really just about getting that visibility. You don't even need to see, you can be steered in terms of where you're going to get the right outcome.
Well, the decision around these recommendations, and we'll get political for a second, Ben, on this, because there's a lot of stuff we don't know. Right? There's a lot of stuff we don't know. But the decision to change the remuneration for mortgage brokers will impact all Australians, whether or not you use a mortgage broker.
Yep.
So let's do it really simply. Less competition in the market, there's less pressure on competition. So banks will start charging you more for your mortgage, irrespective of whether it's broker originated. That's a very
important point, Phil.
Or not originated by a broker. Okay, interest rates go up, people start struggling paying their mortgages. What happens? They stop spending money. Impacts the economy. What happens to property prices? Well, who knows? We're already in a very difficult market. Now you throw in political uncertainty. My discussions with people, and I like to think within the property space I'm reasonably well connected, both sides of politics now are looking at this particular recommendation. And there's a lot of umming and ahhing going on, because even the Labor government, and whether or not you are a Labor voter or not, it's highly likely that they might be sitting in the seat in Canberra in a couple of months' time. They're sitting there thinking, hang on a second, how does this impact the people who are our constituents? And everyone
awkward.
will be impacted. It's very awkward.
The reason why it's awkward is because Labor want to be tough on banks. That's the politics.
Absolutely.
Right? They're playing this and milking this. The Liberal Party hasn't 26 times they rejected the idea of a Royal Commission. So they want to milk this for everything it's worth. And, they want to see prosecution. They want to see Parliament sit for longer to be able to process that. So that's the politics. But I suspect they are a little bit of surprised by the groundswell of support for people in terms of using brokers, because they came out before the Royal Commission, we're going to adopt every policy, and we're going to make sure. Now everyone's been sort of backed into a corner, both Liberal and Labor. So we would hope that common sense prevails. We're definitely going to see a new government, whether coming into power in terms of whether it is a Morrison government. There's going to be changes, right?
Yeah.
There's going to be reshuffling of your cabinets and so forth. So I've seen a few of these, reports come through over time. I mean, we've been advocating, Phil, for property investment advice to be regulated. There's been 9 recommendations in, 11 different independent reports at state and federal level that it should be regulated, and it hasn't happened. So hopefully, the consequences of change, we need to be really well studied in terms of whether we move to a no trail model or we move to a fee for service model.
I think it's very, very important. Look, whoever ends up in power, the motivation is the same. They want a better, as well as maintaining sort of in power and sort of sort of appeasing voters. They want what's best for Australians. Let's face it. That's why you go into politics.
Well, you like to think so.
Oh, you know what? I have a fairly firm belief that may be that's what they want. And I think that to your point, Ben, that the Royal Commission was long overdue, and I think politically you'd got pushback from the from the incumbents, and then it's been very much endorsed by by the opposition. However, I think with information that's come out since, there is been a very serious review and consideration of exactly how big this marketplace is, and I think nuances like the fact that there are negligible complaints. We've provided research to say how happy people are, but you've got to look at. There are no complaints or negligible. Looking at the size of the market and compared to other banking customers, complaints, via brokers are tiny. I think you look at there are approximately 500,000 loans taken out through the broker channel every year. These are significant numbers of working Australians. And I think that common sense, I know that common sense will prevail. I think whoever is in government will take their position very, very seriously. They will look at the ramifications for Australians. They'll look at the ramification for the broader economy. It's their job, whoever's in power, to make sure that things keep moving along. And I'm confident, and from what I hear from some of the groups that are supporting the industry, that there is certainly, the message is starting to get through.
By no means do we have a political environment which It's very polarised at the moment. You even look at some of the decisions this last week. No one can get their head around. There's people jumping across bench. There is no real cohesive attitude towards commonality in politics right now. So I think whatever happens, you're still going to get a very disparate political position right across the spectrum, and this impacts every single Australian. I know pretty much every MP or any MP worth their salt is picking this up, and I know your report here, Alex, is sort of gone right across the land, and there's politicians right across the country who now have copies of these things, and they're talking about it because they're sitting there thinking about their local property market, they're sitting there thinking about their local economy, their healthy economy, they're sitting there thinking about the power of the people who live within their jurisdictions to lead nice, happy lives. And they don't want people sitting around with their heads in their hand, because of decisions made which are within everyone's control.
You've got a very look. The first and foremost is just constant looking at curbing the power of the banks. And you know what? I mean, when I'm in business, you and I are in business. We're in business. I like it when there's no competition for us. We make more money. Hey, we're all the same. But when you have banks that control so many outcomes for so many people, it is a government issue where you've got to look at curbing that control and ensuring that people who rely on the banks and the finance they provide and the advice they provide have a fair go. So government is first and foremost looking at just controlling the banks. This was the purpose of the Royal Commission, to hold them to account. It is very understandable that conflict of remuneration for the benefit of Australians is an issue. It's an understandable thing to look at. I think now that this has washed through, and now that the real understanding of the potential damage to Australian borrowers through rather than improving competition, actually narrowing competition, I just think that's starting to resonate.
So Ben, what do we do about all this? So we're sitting here, we're gibbering on. We're obviously passionate about choice for consumers, keeping things competitive. I'm an investor. I'm tuning in. So what? What do I do now?
Well, I think there's one more important point is we have been doing a bit of bank bashing. There's no doubt about that because, yes, we are passionate and, I sit here as a broker, as a licensed broker. There was still fat in the system for brokers, right? But that was addressed in the ACCC findings and the working group that started to get together. So the idea that you were paid an upfront commission for money that was never going to be used or draw down, or a broker arguing for a client to just max themselves out because it's in their own self-interest. So there has been some changes in regards to how much commission is going to be paid to the broker in the event that the money isn't utilised. That's a good move, right? There was also system overrides and incentives for volume-based performance gone. So I think we've been sensibly working through where there probably has been some advantages that have been taken by brokers in terms of that might have given them a better remuneration as opposed to whether that was in the client's best interest. So I think that's important. I think the best interest test is a good move. So for me as a consumer, I'm sitting now saying, okay, well, if you've taken all that away from me and if there's some other reforms that you can do and you can continue to keep educating the broker to be the specialist in the space, that's got to be good for me. That's got to be good for me when I go and see a broker. It's got to be good for me when I go and do any type of lending. So we want, obviously, lenders direct to also give the best advice that they can. And so that best interest test for brokers and for lenders themselves is a welcome enhancement to what we're doing here. So it hasn't all been, what are they thinking? There are some really good takeaways. I just think they've overdone it.
I think I was just to add to that, and it's all about choice, And one thing that really annoys me is that there are big decisions being made on behalf of everybody. Now, I choose to use a broker. As I've said, I've used bank branches and I've had really good outcomes. And if you have a local banker who you trust and who's giving you a good outcome, hey, listen, we're not saying everyone should use a broker. We're saying you need choice, not just because it's a personal thing and I should choose where I go. There is also, as we've sort of addressed, there is an underlying issue around competition. And if that choice goes for 60% of Australians who choose to use a broker, there will be diminishing competition and the prices will go up because this is what happens.
I'm not going to pay $2,000 or $3,000 when I can get something for free.
Yep.
Or even because it's commensurable to the work that was performed at the cost is what he said in the report. So if I'm an online lender, that cost might be $150. So it just doesn't make sense, unfortunately. I don't think it's been well thought through. And again, coming back to the $292,000 that I'm going to be paying in interest, not principal payments back, I think there's enough in there to be able to allow the broker. And in that particular example, you're talking about a $3,500 upfront fee. And if that lender didn't get moved, well, the broker hasn't done their job properly. But over the course of, if they did stay there with the trailing commission as well, of that $292,000, they would earn just on around $12,500, which is about 1.2% of the total money received by the bank. But again, I would never, I just did some modelling on it, and I thought if anyone stays with one bank for 20 years, unless they're getting pricing requests, it just doesn't happen, right?
Do you know what I do, Bennett? Because I think what you're talking about there is really important. People might be just going, oh, hang on, I'll sort of get that done. Do you mind putting a piece together for us?
No problem.
We'll write it up and go and check it out.
Yeah.
I think that'd be really good, because you're saying that out of the $250,000 that a bank makes, $292 on Mr. and Mrs. I've got a mortgage, the mortgage broker over that 20-year period receives $12,000.
$12,800 odd. From memory.
Okay. All right. Well, that's important. So what do we do about it? What do you do? Okay, I've listened to this and I've gone, I'm angry. I'm pissed off.
All good and astute property investors are probably using a broker, let's be honest, right? So if they are the case, get involved. There are some sites that are out there, keepcompetitionalive.com.au is one of those sites where you can learn more about the factual information around that. I noticed on Facebook, you can also, say I prefer brokers over banks. So there is definitely some material out there that you can show your support for the broker industry and the broker who's looked after you, who's given you that opportunity to either get your first home or start creating that wealth journey that you're going on. So I think there is some places where you can get active and show your support.
That's good. And also don't be scared to call up your MP either. If you're concerned about your livelihood in terms of your ability to pay your mortgage and ensuring that yourself and your community have access to mortgage products to ensure you can sustain the life that you have right now, give them a call. Make sure they've got a copy of the mortgage access to mortgages report. We'll stick it up online at Smart Property Investment.
Put it in the show notes, Phil.
Go and check it out. Put it in the show notes. Pass it around because the numbers speak for themselves, but more so, and what I was alluding to before, this groundswell now, I think there's a lot of shock and awe once these recommendations were handed down. It's taken people in mortgages a little while to get their head around it, actually understand what it all means, but I'm quite proud of the fact that the mortgage industry has really got together and behind each other as a cohesive force and said, hang on a second, we need to make sure people know what's going on. And it's not about my livelihood's in danger. The average mortgage broker, Alex, correct me if I'm wrong, makes about $85,000 a year, right?
Yeah, a little bit less.
A little bit less, right? So they're not highly paid professionals, right? They're working hard for their dollar.
And none of that's salaried. So these are people that have to earn that money. And if they don't work hard and get the right outcomes for their customers, then there's nothing. The borrower doesn't get a result and the broker doesn't get a result. I think just being informed, I think it's just reasonable for people who don't use a broker. Because, maybe I've chosen to use a bank. Maybe I'm thinking about using a broker. Maybe I'm confused about what a broker is. Maybe I don't sort of understand what the value is. But I think just understanding about, what the model is and what it represents to everybody who is taking out a loan.
The results speak for themselves, Phil. How do you move from less than 10% market share to 59% market share, have 96% customer satisfaction? The customer is telling you they're very happy for brokers to be paid commission.
Yeah, we asked them specifically.
They are telling you.
So we said, how do you feel about? So there was in the survey when we conducted, we had a statement explaining that upon settlement, a broker is paid a fee by the bank. What is your sentiment? And 79% of those that were surveyed said they have no concern. There was another 17% that said they had some concern. There's only about 3% that said, maybe 3.5% that said, I am concerned. Which is, look, it's not just the fact that borrowers are happy with the outcomes from using a broker. It's not just the fact that they'll go back and use a broker again. It's not just the fact that of those that go and use a bank, only 1 out of 3 will go back and use the bank. The other 2 are going to look at using a broker. But there is no real concern about the fact that the way that brokers are paid. So it isn't a perfect model, but you know what? It's a good outcome for Australians. And I think that the common sense should prevail and just look at not changing something which is working. We don't have rows of people down the street who've been lost everything and turfed out their homes. There are 1 or 2 isolated cases, and the Royal Commission has been good because it's a very robust thing to look at remuneration, to make sure people are being looked after. But the bottom line is, and the findings are, it works. It's not just a matter of if it works. You've got very, very happy customers. You've got very, very few bad outcomes. You've got strong intent from those that aren't using a broker yet to move to a broker. Why mess with it?
So I want out with this because we're going quite long, Ben. But when you sit there with Bryce Holdaway, your co-host on the Property Couch, and before you go on air or when you're just chewing the fat over lunch or a beer, what are you guys talking about at the moment when it comes to this? Have you sort of gone past it? I'm frustrated by this, and we now need to sort of educate and inform. What's the sort of conversation behind closed doors you guys are having?
Well, we're always calm. This sort of stuff takes time to play out. So, I mean, we've got a brokerage business that employs 12 people in the brokerage team. And so we needed to, first of all, address their concerns. We've got some fantastic brokers and they're building livelihoods and they're delighting customers. So it's more around, I believe that the groundswell of support will be a good case. I couldn't quite get my head around how we would get better client outcomes or better consumer outcomes if we went to a fee-for-service model, considering the rest of our business is fee-for-service. So I've adopted that in our financial planning business. We've adopted that in our advisory firm. So I think that was the main thing. I said, there's a lot to play out here, and certainly we get vocal when we think there's ill-considered consequences associated with that. So I think that's the main one. And now we're getting behind this and coming up here and doing a podcast with you and just sort of sharing the story. Because I don't want this to be about the business and the people behind it. I want this to be about the consumer outcomes. And, if we're able to provide that lending for our clients to get, to their financial peace, then, that's purpose and fulfillment in the work we do.
That's great. So, we should do this more often. I've really enjoyed it. It's great.
Mate, I'm happy to come up.
We should do it. Yeah, well, vice versa. And Alex, thanks for your participation.
It's been good to be on.
As I mentioned before, Alex is out talking a lot of things at the moment around this, and I think everyone involved in mortgages is open and ready to communicate. So if you have any questions, give your mortgage broker a call. They'll be more than happy to talk to you. Ben, if you're not listening to it yet, Property Couch, I think what happens is that people listen to both of our podcasts.
Well, because your content's great, Phil.
It's
and
good.
The guests you get on are real life stories and you get the best of the... So,
it works well.
You got to check it out. It's a great podcast.
So make sure you listen to the Property Couch with Ben and Bryce. Also, your Empower Wealth. What's your website for that?
Just empowerwealth.com.au.
That's it. All right, good one. Remember, smartpropertyinvestment.com.au. If you're not yet subscribing to our morning newsletter, so you're the first to know what's happening in property and property investment, smartpropertyinvestment.com.au/subscribe. Remember, just search Smart Property HQ if you want to check out what we're up to, or search Property Couch and all the social stuff, and you can follow these guys as well. I keep connected with what they're doing, and we'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.